following is a paid program. The views expressed are not necessarily those of the management or ownership of Score North, KSTP AM 1500.
Oh, hi.
Who is it?
This is the place to talk about everything related to the home, buying or selling real estate, financing, and improvements that can help increase your home's value.
I'm gonna make this place your home.
This is Minnesota Home Talk on Score North. Here's your host, Jason Walgrave.
Good morning, folks, and welcome back. This is Minnesota Home Talk. We're live on Score North on 1500. We are the original real estate show here on AM 1500 radio. 85 years on the air, 50,000 live shows. And we're live every Saturday morning, of course, on demand at minnesotahometalk.com. Be sure to check out our website, minnesotahometalk.com. I'm your host, Jason Walgrave with Walgrave Real Estate Group and the Minnesota Real Estate Team at RE/MAX Advantage Plus. Back in studio. First time in the new studio, though. Jerrad Havens with Credilife.
Good morning. I love this studio.
You love coming in here, don't you?
I do. I wake up like right away to the alarm. I'm like, let's go.
Let's go. It's great to have you, Jerrad. Of course, we've been good friends for many, many years. Business partners for a whole bunch of those years. You and Brian and your team have done a phenomenal job with your company, helping folks out. And today I'm excited to talk about Credilife and the different things that you're doing and how you're helping folks out. We're going to open up the phone lines right away, 651-647-2910. That is the call-in number here to the studio. The best real estate or credit question this morning, you're going to win 4 tickets to a Timberwolves game. All 4 seats are together. Great seats. I think the T-Wolves are on a 3-game winning streak, so they're a lot of fun to watch. Give us a call with your real estate or credit question. We'll keep the phone lines open throughout the show. Best question is going to win 4 tickets to a T-Wolves game. Phone line, studio lines are open at 651-647-2910. That's the call number to the studio. Give us a call with your questions. Win Timberwolves tickets. Best question is going to win 4 tickets. Studio lines are open. Give us a call at 651-647-2910. We also have a text line you can win via text by texting your questions to 763-443-5664. 763, the text line, folks, is 763-443-5664. All right, we got a lot planned for the show this morning. We're going to be going over our smoking hot listings to start. Then we're going to go over a little bit of the market updates, statistics for the Twin Cities real estate market. And then we have the 7 ways you're accidentally improving your credit. We're going to be talking about those. Jerrad and I have a lot to say. Well, I have a little bit to say. Jerrad has a lot to say on those. We've got our insurance specialist. Would you say you're an insurance guru, Evan? Would that be fair?
I mean, you could make that argument. I certainly think that some people would call me an insurance guru. Yeah. I wouldn't introduce myself that way because that makes me sound a little bit too mystical, I think.
I love it.
I'm just a bald guy from Minnesota that can tell you about insurance. But yeah, sure, I'm an insurance guru. Why not?
Insurance guru Evan with Paragon. So if you have any insurance questions, real estate questions, credit improvement, or just questions about your credit score, how do they come up with that score? And we're going to be talking about that in the show and giving away 4 tickets to T-Wolves game for the best question. Give us a call at 651-647-2910. That is the studio line. Give us a call with your questions. T-Wolves tickets. 4 T-Wolves tickets for the best question this morning. Give us a call at 651-647-2910. The text line you can also win via text by texting your questions to 763-443-5664. 763-443-5664. All right.
Yeah, bring on those questions.
Bring on
See
those
if you
questions.
can stump me with some credit questions. I want to hear them.
Oh, you know what? Stump the credit guy.
Let's do it. The credit guru.
The credit guru. I love it. Hot listings?
Yeah, give me 1 second.
Oh, yeah, we got plenty of time. We got a whole hour.
I love the hot listings.
Hot listings. They're pretty hot this morning.
It's so fun. I mean, there's so much going on. The market's hot.
The market is hot. As we talk about, the spring market in Minnesota starts really that first week in February. So if you're a buyer out there, you want to get going, you want to maybe avoid some of the competition. Let's take a look this month.
Yeah, now's the time.
If you're a seller, now may be a time to get it listed rather than waiting. Less homes on the market. It also might be some advantages for a seller to get listed in January rather than February.
It's all about being proactive,
Yes.
right? I mean, that really is key. A lot of times people delay, then they look back and go, oh, I should have started a little earlier,
Yes.
So be proactive now,
Yes.
and that way you can make informed decisions.
Well, and we talk about this also, whether you're thinking about buying or selling in 5 weeks, 5 months, or 5 years, we want to talk to you now. I mean, there's things for homeowners, for future sellers that maybe it's improvements or maybe it's updating. What things can you do to get the best return? What things should you not do, which you're not going to get a big return on. We'll talk about all those things. I'll walk through your house and give advice on how to prepare your home to sell for the highest amount and with our marketing plan in the quickest time.
Well, you did that for me personally.
Yes.
My place in Burnsville.
Yes,
I
sir.
I experienced it personally. It was great. We're able to add in all the additions, the new flooring, and it went like instantaneous as soon as it hit the market.
Like
multiple
a
offers.
hot knife through butter, right?
It was awesome. It was really good.
All right, folks, we do have the phone lines open. If you'd like to win 4 tickets to a Timberwolves game, give us a call. The studio lines are open at 651-647-2910 is the call-in number to the studio. Questions about credit, your credit score, real estate, all things real estate related. Insurance questions, give us a call. Best question is going to win 4 tickets to a T-Wolves game. The winning T-Wolves, by the way, 3-game winning streak. You can call us at 651-647-2910. That's the studio line, 651-647-2910. We also have a text line. You can text your questions and win via text. Text your real estate questions to 763-443-5664. 763-443-5664 to win T-Wolves tickets, 4 tickets to a Timberwolves game. Best question this morning is going to win. You ready?
Yeah.
Smoking hot listings. Where are they? Here they are.
Are you ready?
I'm ready. We're going to start in Savage. We've got a lot for sale in Savage located at 14649 Sumter Avenue South. It is a 0.64 acre lot. On the market for $110,000. Pebble Creek Custom Homes is building. There are 2 lots left in this Twin Ponds development, and this one is on the market for $110,000. Our next is a to-be-built by Pebble Creek Custom Homes in this development, located on Sumner Avenue South. This is the corner lot. The to-be-built home is a 4-bedroom, 3-bathroom, 3-car garage, 2022 built. This is a beautiful Rambler, one of my favorite homes that we've built. I love the design. Front elevation is incredible. 2,400 square feet above ground. This one is also on a 0.64 acre lot. On the market for $995,000. We're going to move. We've got a brand new condo on the market located in Minneapolis on 5545 Chicago Avenue, unit number 205. 1 bedroom, 1 bathroom, 1-car garage. We've got updated kitchen, fantastic flooring. 1979 built with 752 square feet. This home is a great location. It is ready to go, brand new on the market just a few days ago for $174,900. We have in Cokato, Minnesota, located at 545 8th Street Southeast. 5-bedroom plus an office, 2-bathroom, 2-car garage, 1974 built with 2,364 square feet. Got brick on the front, great front elevation, amazing lot, 0.7 acre lot. This home is priced to sell, a great opportunity to buy a great home on a fantastic lot in Cokato.
Every time I look at this listing, I'm really just jealous and envious of the yard. It's a great house, but the backyard in particular is just incredible.
You could have many animals, you could have many pets or children in this backyard.
I love it.
Right? On the market for $289,900. Moving down to Dundas, Minnesota, we have a development opportunity, commercial zoned real estate property, 130 acres. We have over a half mile of I-35 frontage, located at 1736 Millersburg Boulevard West in Dundas. 130 acres on the market for $5.2 million. Great opportunity to develop If you'd like more information about that, make sure to go to our website, minnesotahometalk.com. Pequot Lakes, Minnesota. Do you know where that's at?
I was going to say, I don't know where that's at.
It's up there a bit. It's probably 45 minutes northwest of Aiken, Minnesota, or the North Shores of Mille Lacs.
Okay.
And so we've got a multi-use property. This is used to be a church built in 1908. We've got 2,900 square feet. The last use, there was a salon in there. It was rented out as a residential property as well. Located at 4572 Main Street in Pequot Lakes, Minnesota. On the market for $125,000. This property has a market rent of $1,250 to $1,350. So a great opportunity to buy an investment property.
Exactly.
If you didn't want an owner-occ or owner-use property. And again, on the market for $125,000 in Pequot Lakes, Minnesota. Pebble Creek has another to be built in Prior Lake, Minnesota in the Cardinal Ridge development. It is located at 16080 Sims Court Southeast, 5-bedroom, 5-bathroom, 3-car garage, 2022 built. This is a to-be-built home, 2,941 square feet above ground. This is a really cool development right across the street from the Twin Oaks and Hidden Oaks Middle School. Cul-de-sac, half-acre lot on the market for $950,000. And in that development, we have lots that range from 135 to 175. They're all half-acre walkout lots, surrounded by a 12-acre preserve. So these are really private. This is a really cool development. Great location, and it's in the Prior Lake Savage School District as well.
It's right where I grew up.
Right?
Yep. I love that area.
It's fantastic over there.
Yep.
Red Wing, Minnesota. This property, Jerrad, this is a property that I think that you should buy. It is...
It's on the screen right behind you, Jerrad, if you want to take a look.
Spectacular. We've got 425 feet of private shoreline. It's on the Lake Pepin area. We're talking riverfront, Mississippi River. It has an incredible beach, 1.08 acres. It currently has a 1929 built pagoda-style home, 3-bedroom, 2-bathroom, 4-car garage. But redevelopment opportunity, this would really, you could build a magnificent property with all of this water frontage. And this home is on the market. This property is on the market for $2 million.
I saw that the other night on Facebook.
Isn't it cool?
That is an amazing property. I was showing Katie, my fiance, that.
It's shocking your views from the shoreline. It does not feel like you're in Minnesota.
The property itself is so unique.
It is
really
immediately
unique. When I saw it, I was like, what is this?
Yes.
This is Minnesota?
So the story is the original owner, he brought the blueprints back he spent some time in Asia, brought the blueprints back in the 1920s and then built this home.
Wow.
And it's cool. That's really cool.
That's really cool.
Our last Smoking Hot listing for the week is in Aiken, Minnesota. This, of course, is on the North Shores of Mille Lacs. It is an investment opportunity. Docks Harbor, an opportunity to buy a resort in Aiken, which is, again, North Shores of Mille Lacs. 32 RV site, 26 boat slips, lodge, 4 acres on Mille Lacs. It also has opportunity to expand as well. So add additional boat slips. A great opportunity to buy some real estate and an investment opportunity in Aiken, Minnesota, on the market for $2.5 million. Folks, for more information about these smoking hot listings, go to our website, minnesotahometalk.com. You can click on the property search button. We've got a lot of fantastic tools on our website. Property search, you can set up custom searches that will send you updates when new properties that fit that criteria hit the market. We have our 72 Sold program, how to sell your home in 72 hours for more than market value. What's your home worth? We've got a free market analysis that we can help you with. That is a free CMA, free market analysis on your home, your commercial property, your industrial, residential, land, anything to do with real estate. We'll do a free market analysis for you. We've got information about our upcoming webinars. Of course, you can connect directly with Jerrad and his team at Credilife. Go to minnesotahometalk.com, click on the Credilife button, and it'll bring you straight to their page and then to their website. Exciting stuff.
I really like that. There's a lot of investment opportunities in the hot list today.
There is.
On that Dundas property, would that be someone looking to build residential or commercial? Is it zoned for both?
It's currently zoned commercial. There's a portion of it that you could absolutely build multifamily, maybe townhomes. Maybe some of it could be rezoned into some residential, but it's a commercial opportunity.
That's awesome.
And the city and the county, they have, within the last few years, they just rebuilt the off-ramp into that onto that location. So opportunity for commercial development is prime and ready to go.
If you were someone that were interested in looking at a commercial property to build on, one thing that I've always wondered about is, a lot of like certain, cities or counties might have like incentive programs.
They do.
How does that work? Is it different per county, whatever it is that they're looking to kind of expand on? Or
Yeah, it can be. You can add, there's state incentives, there's county incentives, there's city incentives. So depending on where you're at, there can be some great tax incentives, low interest financing incentives. So depending on what the city or county's goals are for growing, they can offer developers and builders some opportunity to come in and to build out their community. So
nice. So if someone's interested, they reach out to you and you can kind of break that down for them and see what's.
Absolutely.
That's amazing.
Absolutely.
Yeah,
So
that's really cool.
It's a cool property. And that's just done. This is south. You're probably 7 miles south of the new Elko New Market exit.
Yeah, it's not far away.
12 miles south of Lakeville, so it's not far to the metro at all.
I think I just drove by that just the other day, actually.
Did you see the sign up?
I did.
Giant sign
up.
up.
Yeah, I did actually. Yeah, so that's the same spot.
It's awesome.
When I drove by it, I was like, I was like,
Yeah.
that's a nice piece of land right there.
Great opportunity to develop and invest. Folks, we got the phone lines open. We've got Jerrad here with Credilife. We're playing a little game this morning called Stump the Credit Guy, the credit guru.
Yes, the credit guru.
The credit guru. You know what? We can also have the insurance guru questions as well. Phone lines are open. We're going to give away 4 tickets to a T-Wolves game for the best question. Give us a call. Studio lines are open at 651-647-2910. Best question this morning is going to win 4 tickets to a Timberwolves game, 651-647-2910. Those are the studio lines. They're open. We'll keep them open throughout the show. Best question is going to win 4 tickets to a T-Wolves game. And then we also have our text line. You can win via text at 763-443-5664. That is the text line. That also gives you a chance to win. 763. Text your questions to 763-443-5664. All right, we got a lot to talk about. Jerrad, do you want to jump into our 7 ways you're accidentally improving credit? We can come back to market stats later in the show.
Yeah, let's do it. Let's have fun.
All right, we always have fun. Right, Evan?
I mean, always.
I mean, I would say that 99% of the time I have fun on the show. I would say that 83% of the time you have fun on the show. That 17% is something technical that is not working.
Exactly.
That just changes the deal.
Yeah, I don't think that's an unfair characterization. But since we've done 85,000 shows, if 99% of them are fun for you, that still means that there are like 800 shows that you have not had a good time with.
That's a good point.
So it does happen from time to time.
It does happen.
And that's why he's insurance.
Right.
The stats guy.
The stats
That's right.
guy.
I love it.
Yeah, calculated risk right there.
I love
Exactly. And to be clear, obviously, that's still a very good rate.
It's a good rate.
You can't expect everything to be perfect all the time.
No, I mean, if you have nothing but 5 stars, you got to question that, right?
Exactly.
I mean,
You need contrast in life.
4.8.
It's like,
Yeah.
those are fake
If
reviews.
you have 10,000 5 stars and that's all you have,
Yeah. 4.9, that's really good.
Yeah.
4.8, it's like, okay.
I know you and I have talked about this in the past. I think that there are a lot of people who don't appreciate the opportunities and the things that they have.
Yes.
And yeah, you require some of that context. If all you've ever had in your whole life is USDA prime steak, and then you're just kind of like, well, I guess this is okay.
Yeah.
You don't have that requisite context of, we don't have the money for the prime steak, so we're eating the choice stew cuts tonight or whatever. And once you have that to compare and contrast, then all of a sudden what you had before becomes better in your mind.
I love this. That was a perfect lesson, actually.
Yeah,
I know, life lessons
appreciation and gratitude.
And
I love it.
If you have those cuts, you just have to crock pot them for like 8 hours and then you're good.
Oh yeah,
So-
exactly.
Really good.
Different techniques for different types of beef. We'll do a full cooking stream sometime in the summer. Oh yeah,
That's a
With this
great idea.
podcast, we just bring the instant pots in.
yeah.
That's a great idea.
Yeah, where we could do a chili cook-off. We could, there you go.
You know what? I like that. I like bringing food into the show. I mean, it is Minnesota home talk, and certainly food has a lot to do with your home.
The
Yes,
only
it
reason
does.
to own a home literally the only reason to own a home is so you can cook. Everything else is superficial.
That's something to think about. Right?
Yes, it is. That's awesome.
Says the fat guy.
All right, guys, we got the phone lines open at 651-647-2910. Give us a call this morning. Best question's going to win 4 tickets to a T-Wolves game. The winning streak of 3 right now with the T-Wolves. If you'd like to go to a game, give us a call with your question. Real estate, credit, or insurance. Phone lines are open at 7. Phone lines are 651-647. That's the studio lines. 651-647-2910.
And if you don't remember it, it's scrolling across the bottom of your screen right now.
Oh, that's
new.
perfect.
I know, right?
New?
Yeah,
I
it is
like
new.
That. That's
We've got it
fantastic.
scrolling
Nice.
across the bottom screen. We got it in the comments.
Man.
Oh, yeah.
We're high tech here.
We're big time.
I like it.
I was talking to Joe Rogan this week, and he was impressed with how we were doing the show.
That is absolutely
I gave
amazing.
him some advice on his show. He appreciated it.
lighting.
He was
He
great.
could use some different lighting.
We have a text line open. You can also win via text. Text us your questions at 763-443-5664. That is the text line. Text your real estate questions at 763-443-5664.
Those are the ways to win. I wanted to point out we did get a question via comments, and I figured it would be a question that you'd be interested in taking now before we dig into the credit stuff.
Sounds good.
Kelly wanted to know, what kind of timeline would a buyer be on to be able to purchase conventional if you qualify for an FHA?
So that's a great question. So the differences are you've got some credit score requirements that are different between a conventional and FHA, and then your debt to income ratio is also different. Down payment, there is a 3% down conventional program. FHA has 3.5% down. So depending on how long it takes to maybe improve that credit or pay down some of the debt, so your debt to income ratio is lower. You could do it in 30 to 60 days. But it could be quicker depending on when the companies are reporting to the credit bureaus. If you're able to do things quickly and they reported next week, you could see a change in your credit in less than 30 days. And that would be an opportunity to buy rather quickly. So.
And I think one point about that too is that it would be specific to their current credit status, their report, But one thing I like to point out to people is that if we can look at how to improve your credit score, your middle score, right, to get approved for better financing, on the conventional side, your credit score plays a huge role in the mortgage insurance premium.
Yes.
Huge.
Yes.
And I always educate people about that so they have more buying power. Because to me, if you can go from FHA to conventional, improve your score, get a better program, on average, you might save $150 to $250 a month sometimes
Yes.
on the mortgage insurance premium alone, which is more buying power for your home. That might be $40,000, $50,000.
Absolutely.
And so it's huge. So if you have some wiggle room and you can do those type of things, look at that. Now instead of paying more on a mortgage insurance, let's pay more for the home that we actually want.
And this is something that people often misunderstand because they hear the word insurance.
Yeah.
So they think, my guy's really good. I'm a great insurance agent. I can't sell you mortgage insurance. That's not how it works. It's not insurance for you. It's insurance for the lender.
Yep.
And it's completely 100% based off of your credit score and risk profile. And that's it.
Yep.
There are no competing quotes. There are no, if we go over to Travelers versus
Correct.
Safeco, there's none of that. It is just tied to your loan. And your home insurance, which you have to pay for to, get a loan as well,
Yeah.
that's something that you have to worry about. But your actual PMI, that's something that the loan company is just going to dictate.
Yeah.
And credit score makes a huge difference.
Yes.
Huge difference on that. And so the two things that are typical, if you're putting 20% or more down, you can avoid having the mortgage insurance.
Yep.
If you have a conventional loan, that mortgage insurance you can have it dropped off after 5 years, depending on what the equity in the home is. FHA, it never leaves, and so you have the mortgage insurance premium, which is typically higher on FHA than it is on conventional for the term of that loan, and so that does not fall off. And you mentioned $150 to $250 a month in savings. Well, a quick calculator, folks, for every $10,000 more that you mortgage or buy, that's approximately $40 per month.
Yep.
And so you're talking $50,000, that's that's $200 a month.
Yep.
If you're saving that in mortgage insurance, that now increases your buying power. And $50,000 on a house maybe that's going from a townhome into a single family.
Exactly.
Maybe it's going from a 2-car garage to a 3-car garage, or a small yard to a larger yard. And so we love talking to people early on in the game when they're thinking about buying a home. Maybe they're thinking about buying a home in 2022 or 2023. Let's talk now. Position yourself for the best mortgage or financing options available. So that means getting your credit score up as high as you can.
Yep.
And I think with credit, a lot of people, there's this misconception that, I don't need to work with a credit repair or credit improvement or credit health company like you guys are.
Yep.
Because I've never been late, never missed a payment. But it's so much more than that.
It's way more than that. And our company has evolved actually into that. When we first started 9 years ago, we were more focused on credit repair itself. Helping people who had an event in their life, had some damage to their credit, which we still do today, and we do amazing with that. But we help a lot of people now who are going from fair credit to good, from good to excellent, because it plays such a huge role in their financing, their buying power. It impacts everything. And so there's so many cool things that we can do. And to me, the more we educate, the more proactive you are, like we talked about earlier, the better you're going to be, And so that's what it's all about is really empowering people so they can have more buying power, more opportunity, more options.
More options.
Exactly.
That's what it's about. So, folks, we got the phone lines open. It's 651-647-2910. That's the studio line. Give us a call if you'd like to win 4 tickets to Timberwolves game. The best real estate, credit, or insurance question this morning is going to win. Studio lines are open at 651-647-2910. Give us a call. You can also text your questions to 763-443-5664. Text your real estate, credit, or insurance questions to 763-443-5664. 5664. Of course, we are streaming live on social media, YouTube and Facebook. Feel free to comment. You can ask questions on there as well. We've got this wonderful new video podcasting studio here at Hubbard, and it's a lot of fun. So check us out, whether it's online through social media, you're listening on AM 1500 radio, you're connecting through one of our websites. We appreciate however you're tuning in, and I would love to hear from you. Give us a call, send us a message, shoot us a text with your real estate, mortgage, or credit questions, and the best question's going to win 4 tickets to Timberwolves game on us. All right, 7 ways.
Here we go.
7 ways you're accidentally improving your credit. Well, this seems like a good thing. 7 ways you're accidentally improving your credit. Number 1.
Check this out.
Number 1. Oh, look at this.
There we go.
You know what? Evan is just he is on today.
I think at this point we need to call him a wizard.
Yes.
Oh, yeah.
That'd be good.
Totally. Yeah.
Wizard.
100%.
He makes it happen.
Wizardy.
I think insurance is a very arcane art. So wizardry is appropriate. Yeah.
Can we get you a hat for next week? Like a really cool pointy hat?
A hat would be nice. I am quite
a
bald.
wizard hat. All right, number 1, keeping older credit cards active. You might not realize it, but maintaining older credit cards instead of canceling them work out to your credit benefit. Why is this? We get this question where we're talking to a buyer, we're getting their custom search set up, and they want to make sure that they're in the best position to get the most financing options. And they say, I've got a bunch of cards I haven't used in a while. I'm going to cancel them. Is that a good idea?
That is definitely not a good idea. There's so much power. I mean, a portion of your score is length of credit history, right? And so that's a big one. The more length of credit history that you have, especially positive, is going to greatly impact your scores in a positive way.
Yeah.
And then on top of that, you have your I call it revolving debt ratio, right? So more active or available credit available. And if you keep it low, right, you keep it open, that's going to benefit your scores too. So a lot of people, I know we've heard that a lot. And when I hear that, I'm like, no,
Just cringing.
don't do that.
Don't cancel it. Don't close it.
And a lot of times because they think of it like, well, I don't use this and maybe I shouldn't show this because maybe it's bad. Like I have too much out there. And it's like, no, actually, you're doing a great job with that. Keep it open. maintain lower ratios and keep that activity. It's going to help you out.
Having open available credit with little to no balance on them, those are great things. And like you said, your credit score, a big portion of that is determined by the history.
Yep.
So if you've got a card that you've had 5, 10, 20 years, man, I think I've got a card. I've got a card that I got when I was 18.
That's awesome.
And so that, of course, that means I've had that card for 300 years. And it's got a lot of history on it. All right.
Well, if you think about it too, think about it as if you were lending your money out to someone, right? If you saw and you looked at a credit report and you see, hey, this person has multiple accounts in good standing. Yep. They've had it for like 20 years, little to no balance, right? Or low balance. That shows that you've been responsible, right, with your finances. I feel comfortable now to lend you money. Hey, you're going to pay me back. This looks good to me.
Yes.
That's all it is.
Yep.
It's painting that picture so that way you're more credible to lenders.
Yes, I love it. 7 ways you're accidentally improving your credit. Number 2, you don't apply for credit a lot. When you apply for credit, a lender receives your credit report. It's called an inquiry. And so you'll see this. I get it 2-3 times a week. I'm checking out at some place and they say, would you like to save, $100 or would you like to save 25%? Or, it's still 2-3 times a week this question is asked. Some people think, well, if I just apply for the credit, but I'm not going to use it, that's okay. In this case, it's one of the 7 ways you're accidentally improving your credit. You don't apply for credit a lot.
Exactly.
How does that affect you if you have a lot of inquiries on your credit?
Well, the thing is, when it's a credit-seeking inquiry, like you're applying for something, even if you're applying with the intent not to really use it, just to have it, that inquiry is going to lower your score, right? And so the reason why that is every time you're applying for something, it's like there's a fail safe there. So if we're in beautiful Minnesota, right? If I went to Mall of America and I walked around all those stores, there's a lot of credit.
Yes.
There's a lot of credit opportunities, right? A lot of credit cards. Well, there needs to be something in place that if you're going through and all of a sudden applying for a ton at once, there needs to be something to finally ding it, like, hey, you're denied due to too many inquiries and your credit now is dropped, right? That's what it's there for. So you have to understand that. And, knowing that it lowers the score, you really want to always maintain, the strongest score and strongest profile possible. So I always let people know, only apply for something when you need it. It's going to serve a purpose. Maybe it's serving the purpose of, hey, I need more credit. Yep. Maybe you have a thinner credit profile and we need more.
Yep.
Then we should go out there and strategically build it over time, not in excess, to build it, right? But if you go out there and just continue to pull, you're going to have a lot of dings and your score is going to be lower because of it. And that shows more risk to lenders. It's like, hey, what's going on? You're applying for all sorts of stuff here.
So you're telling me I've been doing it wrong by applying for a line of credit every week on the dot?
Yes, I would recommend
every Monday I apply for only one account and I don't use it. You
definitely. And another big one. I know we have entrepreneurs that listen to this, business owners. One of the main factors that business owners get denied when they apply for a loan through their business is too many recent inquiries on their personal credit.
Interesting.
It's one of the biggest reasons.
Okay.
And that actually messes up a lot of people. I work with a lot of business owners and helping them obtain business financing and things. We have to be strategic because until you've built up and established a strong business credit score and profile, they will always pull off your personal.
And we did have a text question earlier about that. What's the best way to build credit for your business without personal credit exposure?
Yeah, and so that's the thing. There's a lot of advertising out there. There's a lot of companies that say, hey, build business credit without a personal guarantee. The reality is they are going to pull off your personal until you have sufficient business credit established.
Okay.
You just have to understand that they have to have, there has to be a way for them to leverage risk and make a lending decision.
Right.
So it's going to be off your personal. But what's nice is if you strategically build it, you want to build like business vendor lines of credit.
Sure.
Like a real estate investor like Sherwin-Williams, Home Depot. There's a lot of really cool stuff that you could do that you build through your business. They report to Dun & Bradstreet.
Yep.
And what's cool about business credit, it's all about, do you have it? Are you using it? Do you pay on it?
Yeah.
And do you pay on time or early?
Sure.
It's all the net terms.
Okay.
It's, personal credit is very complex.
Yep.
There's so many different variations to the FICO algorithm.
Yeah.
Business credit is Do you have it? You use it? You paint it? Good. Keep going.
Keep going.
I mean, it really is that. And so it's like, you just have to understand, how do I build it? What actually reports are done in Bradstreet? And once you do that, you'll be surprised the type of lending opportunities that open up for you as a business owner. It's immense.
That's a whole show right there. Business credit.
Oh yeah, we should definitely do that.
We're next time you be on next month, let's talk about business credit next month.
That'd be great.
I like that. Folks, we're talking about real estate, credit, and insurance. If you have questions, you'd like to win 4 tickets to a Timberwolves game on us, give us a call. Studio lines are open at 651-647-2910. That's the calling number to the studio. Best question's going to win 4 tickets to a Timberwolves game. 651. Studio lines are open at 651-647-2910. The text line, you can text your questions, also gives you a chance to win to 763. The text line is 763-443-5664. That is the text line, 763-443-5664. We're talking about 7 ways you're accidentally improving your credit. Excuse me. Number 3, you don't use pre-approved credit cards. You don't use pre-approved credit cards. If you have a history of accepting pre-approved credit cards, your credit score might be lowered. Why is this?
Well, I think that really falls in line with the previous point too. It's like, if you have a tendency to accept a lot of pre-approved offers, when you pre-approved does not mean that you're actually approved. What happens is they're pulling data. They purchase data from the bureaus. They say, hey, based on this, we feel you're approved for this. You're a good candidate for this. Well, the thing is, once you apply, there's an inquiry. It's a credit-seeking act, right? So one, it's going to be lowering your score. And then a lot of times, you may be obtaining cards. This is what I look at, as I'm coaching clients, is it's all about, let's find you the best card based on your current credit status at that point and how it's going to elevate it and grow it.
Yep.
There's a lot of pre-approved cards out there that aren't good, that have horrible terms, that aren't a good fit for you. And so it's like, it can really hinder you. It can lower your score. It can bring you back. And once again, it's like, if you do it too much, it's just going to ding you. It's not worth it.
How many times would you say that you've had someone come to you and say, I need to repair my credit, and their reason is, well, it said I was pre-approved, and then they declined me after I was pre-approved?
Well, that happens a lot.
Yeah.
That happens a lot. I would say the big banks are a big culprit of that.
Yeah.
There's a lot of big banks that market pre-approved offers. People apply and they're denied due to credit all the time.
Because it's a numbers game.
Yep.
Right? If you get, they just blast it out.
Yep.
They send out.
Yeah, they send out envelopes that say you're pre-approved for up to $50,000 worth of credit on the front of the envelope.
Yeah.
Yep.
And then you open it up and it's an application.
Yeah.
That's exactly what it is.
Online app.
That's exactly what it is. And this goes back to our point earlier. If you're going to apply for something, there needs to be a purpose behind it. It's like, hey, I'm looking for a loan. I'm looking for a credit card because I want to grow my credit profile. I need a credit card, right?
Yeah.
But you definitely don't want to prematurely just constantly just apply whatever is thrown your way. It's going to really hinder you.
You need a strategic plan.
You do.
And that's something that your company does so well at, is putting that plan together based on each client's individual goals. And whether that's to buy a home or buy a car or just have access to credit or to build your options through a higher credit score, you guys do a phenomenal job of building that blueprint.
And thank you so much. I really appreciate that. And, another thing, too, that I think about, what a client may go through, what a person may go through, there's also a lot of education on there about, hey, do you need to improve your credit? Do you need to build your credit? Well, hey, get this credit card. Hey, you need to have credit cards. You need more credit. And so that's very misleading for a lot of people who are trying to improve their credit, because now they're out there pulling the trigger on pre-approved cards and getting denied. Maybe they're getting accounts that are marketing, hey, get this card and build your credit, but the terms on that are not good. In fact, here's a really solid example. Secured credit cards are very popular for people who have poor credit looking to rebuild. Well, the thing is, you want to find a secured card that graduates to an unsecured card.
Got it.
There's only a few like that.
Okay.
Most secured cards stay secured, and the only way to increase the limit is by funding it additionally yourself.
Does it say secured card on your credit report?
So in most cases it does not, but there might be a line item or description that may say secured.
Got it.
But in most cases it's going to show up just like a credit card.
Yep.
So it depends on the type of credit report that you're pulling.
Okay, I love it. Folks, so much to learn this morning. Do you have questions? Give us a call. 651-647-2910 is the call number of the studio. Best questions going to win 4 tickets to a T-Wolves game on us. Give us a call to win. Get your credit questions answered. 651-647-2910. You can also text your real estate questions to 763-443-5664. 763-443-5664. That is the text line. Text your real estate, credit, or insurance questions to win 4 tickets to Timberwolves game. We're talking about 7 ways you're accidentally improving your credit. Number 4, you don't accumulate high balances on your credit cards.
That's huge.
You don't. So this kind of leads into, we have clients all the time that come to us and they have, $2,000, $3,000, $5,000 credit line, credit limit on their credit card. And maybe their goal is, I want the points or the miles.
Yep.
And, so I can just use everything. I use my credit card to pay everything every month. But that's okay. I never carry a balance. I've got a $5,000 limit. I charge $4,000 a month. But as soon as I get that bill, I pay it off. So I'm good.
Exactly.
Are you good?
You are definitely not good. Now don't get me wrong. There's ways, I work like I'd say, like I brought before, a lot of business owners I work with, they want to maximize on points and miles and all that. There's a lot of benefits, right?
Sure.
But you want to be strategic about it. So what's important to understand is your payments are not what's reported to the bureaus. It's not your payments. Mm-hmm. That's the reason why if you ever look at your credit report and you see the first ding on there is 30 days, right? Oh, right. You were late 30 days. Yeah. Well, that's because when that company generated a new statement, hey, you're delinquent. You didn't pay us last month. Ding, 30 days.
Yes.
So it's not your payments. It's actually when they generate your billing statement. So if you are, in your example, I got $5,000.
Yeah.
I spend about $4,000 a month. They generate that statement and say, hey, you got $4,000 balance out of $5,000, minimum payment of $180.
Yeah.
You paid off in full. The reality is that's going to report showing $4,000 out of $5,000 as if you're over leveraged, higher ratio, which is a negative impact to your FICO credit scores.
It is negative.
Big time. It's 30% of the score.
30% of your score is
it's
based
a third
on
of the
balances.
pie.
Yes.
That one thing. So it can really hurt someone. It can really harm someone in their credit because what if they're doing that with multiple accounts? Now let's say we have like $50,000, like your business. I bring a business owner again because this really happens a lot with business owners. You got $50,000, multiple lines, right? You're using them for business expenses, marketing, all these different things. And to someone else's point, they asked about how do I get more business credit without it with my personal? Well, once again, they're going to pull off your personal until we get enough.
Yep.
Well, then what you want to do is, if you look at your billing statement, everyone is going to have something called the billing cycle date or end of statement date. You want to pay off that balance down to a low ratio. I wouldn't do 0. I'd actually do 3%. That's the golden number, 3%. Pay it down to 3%. Few days, so it actually goes through. The payment's got to go through before the end of that cycle. Then what happens is when they generate your bill, now that balance is only, let's say, $300, right? Now it reports how we want it to report, but you're still using it and maximizing on those points.
So if you paid it off every month before the billing cycle, does it show any type of activity? Like you said, you want to keep 3% on there, but if it's paid off before the billing cycle, it's reported as 0 every month. Does that then show no activity, or does it show it?
So that's why it's so important to 3%.
3%. Got it.
Because 0 isn't necessarily bad, but it can be over an extended period of time because now it seems inactive, right? We're maintaining zeros. But 3% is a very powerful number.
Awesome.
Because all the different FICO algorithms, 3% is always going to put you in the best position to maximize score.
Awesome.
It's going to appear active. You're going to have low balances compared to what's available. I mean, it's like a dream come true for most lenders when they see that.
Yeah. Higher the score, more options.
Exactly.
Folks, we got the phone lines open. If you'd like to go to Timberwolves game on us, we're giving away 4 tickets for the best real estate, credit, or insurance question. Phone lines are open. Give us a call at 651-647-2910. That is the studio line. We'll keep the line open throughout the show. 651-647-2910. We also have a text line you can win via text. We're going to give away 1 big winner, which is 4 tickets to a Timberwolves game for the best real estate, credit, or insurance question. You can text your questions to 763. The text line is 646-443-5664. We're talking about 7 ways you're accidentally improving your credit score. Number 5 on our list, you're piggybacking off a family member's good credit. Jerrad, you and I talked about this a little bit before the show began. Yep. This has changed, but for mortgage purposes, this can still be helpful. What does that mean, you're piggybacking off family members' good credit?
Yeah, so I would say that with what you did for your family, for your daughter, is extremely powerful because you're teaching your daughter about credit, about money management, understanding what it means for lending, right? That's extremely powerful. And so I would say that there's a lot of benefits to that, especially if you're a parent out there and you have a kid that's growing up, right? They're 18, they're going to college and all that. Teaching them these things is very important. One thing that people have done, parents have done, is they'll add them to to their credit cards as an authorized user. And so a lot of companies will then report that to that person's credit report as well. And so that can benefit them, right? With adding on that account and good standing, like the credit history, all that. The one thing that's important to understand, those things have changed just because there are people that abused that outside of what we're talking about. Yeah. And so they would the sell trade lines and say, hey, we'll add you on if you pay us money and things like that. So you want to avoid that completely because that's completely unethical. And here's the deal. All the newer algorithms, a lot of them factor out authorized users now because of that.
Sure.
However, most mortgage, because it's an older algorithm, still do. And so I would say that can be beneficial for someone in your case when you're really teaching your kid good habits, understanding, right? I think that's very good. But I always let people know that if they're looking to do that just for the sole purpose of boosting their score, well, that's not going to work as much anymore. Yep. And it's more about building your own in your name. That's going to give you the most power overall.
Folks, we got the phone lines open. It's 651-647-2910. That's studio line. Give us a call with your real estate, credit, or insurance questions. Studio lines are open. Win 4 tickets to a Timberwolves game. Give us a call to win. 651-647-2910. The text line is 763. You can text your questions to win via text. Text your questions to 763-443-5664. We've got a caller, Jay. Thanks for calling in. How can we help you?
Morning, gentlemen. Thanks for taking my call.
Sure.
I had a question that if I'm being honest, my spouse and I have different credit scores substantially. Mine's significantly worse than hers is. And we have a couple of properties, and we do have equity. We're looking to do a cash-out refi or HELOC or something, and wondering what would be required to take advantage of my wife's credit score. If quick claim deed is the only way to go, or what we would need to do. And then I'm also very interested to talk to the gentleman you have on today to repair my credit.
Excellent.
Thank you.
Excellent. Thanks, Jay. We appreciate the call. And so we'll get you in contact with Jerrad after the show. And again, appreciate the call in. So to refinance your mortgage, whether it's an investment property or it's your owner occupied property, and we see this often where you've got a married couple, one's got really good credit and the other one does not have great credit. So we can refinance into one of those individuals' names. However, if we do that, we can only take the income and debt ratio of that person. So, we over the years, we always recommend when you have a couple that's buying a house, if you have the ability to purchase the home just in one of your names, you need to do it that way. Gives you more options moving forward with other potential opportunities. But it will come down to, Jay, whether or not your wife has the income to support the qualification for a new mortgage. And we can help out with that. Mike Overson at Illuminate Home Loans, he can do a mortgage application and determine if that's available right now. And if not, then Jerrad can help you get your credit in a little bit better position, and then we can do a refinance, and maybe it's only 60 days or 90 days or however long that takes. We can write a plan to get you there.
Yeah, and that's a solid point. And actually, Jay, I definitely recommend. I'd love to connect with you. I definitely will. And what he brought up there with Mike with Illuminate, Mike and I have been working together for many years, and it's really nice that when you connect with him, he can be able to pull the numbers and know, okay, here's what needs to be met if we're not quite there yet.
Yes.
Then we take that information, we know what needs to be met when it comes to guidelines, and then we get you there. You know, that's the best way to solve that problem. And we'll be able to estimate a timeline too. If there is work that needs to be done, we can figure that out and help you achieve your goals.
Yeah, it's a great question. We get questions similar to that all the time during the year, Jay, so we'd love to help you out and get you going.
Thanks a lot.
You got it.
Yeah,
We'll we'll have Jerrad give you a call after the show, and then we'll go from there. Appreciate the call in, Jay. All right, phone lines are open at 651. We've got the phone lines open. The best real estate credit or insurance question is going to win 4 tickets to a Timberwolves game on us. All 4 seats are together. The 3-game winning streak Timberwolves, they're a lot of fun. Give us a call, 651. With your real estate credit or insurance questions, best question's going to win 4 tickets to a T-Wolves game. The studio lines are open at 651-647-2910. Give us a call at 651-647-2910. You can also text your questions. You can win via text. Text in your credit questions to 763-443-5664. 763-443-5664. That is the text line.
Jay had a pretty good question.
That was a great question.
I think that it can still be beat, though.
That is a fantastic question. I can tell you right now that as of right now, this moment, Jay's going to win those tickets.
Yep.
But we got 6 minutes left in the show, so give us
anything
a call.
can happen.
All right, 7 ways you're accidentally improving your credit score. Number 6, you've auto-scheduled your monthly bill payments. And so that's talking about your mortgage, your car payment, anything that you can set up on an auto schedule to pay is really smart. Look, it's very, very likely and possible that at some point you're going to get a bill that gets mailed to you, and maybe it doesn't get to you for whatever reason. If you've got that auto pay set up, even if it's just auto pay minimum, you can always go in and pay whatever you want, but then you don't have to worry about potentially missing a payment or having a late payment, because it happens. The bill doesn't get to you.
Yeah, I think that's a great point. I am a huge advocate of scheduling your payments auto pay. I feel like based on everyone that I've worked with, my history of working with clients, a lot of times people are hesitant to do that because they're worried, well, will the money be in there when it gets pulled automatically? And so that just comes down to, well, we need to better our relationship with money and create a spending plan. So we have more awareness of what's coming in versus what's going out. That's how we solve that, because you want to protect, I think that everyone's realizing that more and more and more. You want to protect your credit.
Yes.
If you have good credit, we need to keep it good. If we need to build it up, let's get you there and let's keep it good. Best way to do that is to do certain tactics to maintain that, to know that your payments are on time, you have more awareness and all that.
And who's responsible for your credit?
You are.
You are.
Exactly.
and who's going to watch out for your credit? You are.
Exactly.
And that actually comes up to number 7 on our list. We're talking about 7 ways you're accidentally improving your credit. Number 7, you check your credit report regularly. So you have a credit monitoring system, which I have. I love it. It gives me updates throughout the month. If any activity is on there, I get notifications. I know you guys are a big believer in this. Who do you use and who do you recommend for monitoring your credit?
Yeah, so we have partnered directly with Smart Credit. So you just have to go to smartcreditvip.com. We have a partnership with them where we you get all the bells and whistles for a discounted rate, which is really cool.
That's great.
So it gives you the ability to pull a full 3-bureau detailed credit report every month. So you can do a full evaluation. It also does monitoring. So it's monitoring your bureau. If there's anything new, any changes that you need to be alerted of, it's going to alert you throughout the month. And then the reason why I really like working with Smart Credit is they have a money manager piece. And so you can sync up your account and it will help, and also your credit cards and everything, to better inform you of the changes happening. So like to the point we talked about earlier, with the scheduling auto pays, what's nice is it's an additional alert when those payments are being made to keep you in the loop to know. Because, there are times that maybe a payment didn't go through for some reason, right? Well, additional alerts will help you because you want to make sure that if it does get missed for any reason, you get that paid and you don't go 30 days late. Because once that happens, there's a significant negative impact. So having that awareness of your credit, how it's changing, your money, your payments, all in one is huge.
Well, and it can happen, right? I mean, I've gone in, so that the bill pay through my bank, I've gone in, I fill it out, and then I hit one button that takes me to another page. That's the actual submit button. And, I'm multitasking, which I shouldn't do when I'm paying bills.
Here comes the old man going, I don't understand how computers work these days. I set up the auto pay.
And I didn't hit the button, and it didn't go through. And thankfully, it was a card where they send you an alert and say, hey, you didn't get you didn't send your payment, so there wasn't a 30-day late, but it happens. And so this is it's a
more
great
awareness the better.
Yes,
it's so important. I mean, I have people might when I explain this go, holy smokes, he's a little fanatical. Yeah. But I am. All my bill pays, I have it where it triggers an additional alert when payments go out and payments processed.
Yeah.
I have smart credit for myself. I monitor my credit all the time. I have my money manager fully linked up. I am always aware of what's going on with my money because you have to.
I'll tell you what. Here's the one problem I have with autopay. I have overpaid on some bills. It's not really a problem, but like my internet bill, I'm like 2 months ahead at this point because I rounded it up. It was like the bill was 95.73 or whatever, and they changed it year to year. And I was just like, I'm just going to set it for $98. Yeah. And it's been a few years, and so I keep getting notices from them that
you keep paying us.
Yeah, exactly. Your balance is negative $100. Yeah, it's on me, and it's a good position to be in because that way, if autopay doesn't happen for some reason, it doesn't matter.
Yep.
But it's also one of the foibles of that kind of system where it's like it's all manually configured. Some of the stuff it's great. Like I do my banking through Wells, and they're okay. But some accounts. You can just literally click a button and it says, we'll get your bill. Yeah. We'll notify you what your bill was. Like, my gas bill and stuff varies, obviously. They just send that out. But the internet company and some other stuff, it's completely manually configured.
Yep.
Hey, Jerrad, real quick before the show ends, you've got some upcoming events. Tell us about those and how people can contact you.
Yeah. So we are big on events here at Credilife. We host a lot of live in-person events. I personally travel the U.S. and speak at a lot of speaking events and teach about credit, buying power, business credit. But we host a lot of local in one event, and it'll be free for all.
It's very exciting. Folks, go to MinnesotaHometalk.com. We appreciate you tuning in and have a great week.
Feel me in your bones. Just one more night, and I'm coming on this long and winding road. I'm on the way. I'm on the way. Home, sweet home.
Been a paid program. The views expressed are not necessarily those of the management or ownership of Score North, KSTP AM 1500.
Score North on AM 1500 KSTP St. Paul, Minneapolis, 94.5 KSTP FM St. Paul HD2, and on scorenorth.com.
Great Waters Financial specializes in helping you retire comfortably. When it comes to seeking retirement guidance, you don't need a salesman. You need an ally. Great Waters Financial doesn't have a hidden agenda. Their professionals at Great Waters Financial focus on what matters, your financial peace. Start planning for your future now and make your money work for you. Great Waters Financial is the official financial planning service of Cover Your Assets. For more information, call 612-360